The dollar is getting crushed. Euro to US dollar cleared 200-day EMA. Pound sterling to US dollar hit 3-month highs, same story driving both, Fed pivot expectations and ECB a bow rate hike divergence. I'm watching Euro to US dollar 1.1600 and Pound sterling to US dollar 1.3575 for breakouts. But I'm not chasing either pair at these levels. Watch the video to see why. The 10-year Treasury yield just dropped below 3.7%, and the dollar index is testing monthly lows near 99.4. If you're watching the currency markets, you already know what that means. Both Euro to US dollar and Pound sterling to US dollar are surging, and the correlation between US bonds and the dollar has flipped negative for the first time in months. This is what I call the great US dollar unwind, and it's happening right now in real time. What stands out to me is not just the headline price moves in these two pairs, but the way the bond market is leading the charge. The 10-year yield reaction to the retail sales data was violent, a 12 basis point drop in a single session. That's the kind of move you see when institutional money is repositioning en masse, not when retail traders are chasing headlines. I've seen this exact pattern twice in my career, once in early 2022 and again in the summer of 2023. Both times, it led to sustained dollar weakness for weeks, not days, but here's the thing. We are not just looking at one pair here. We are looking at the two major dollar pairs, and they're telling slightly different stories. Euro to US dollar is driven by ECB divergence, while Pound sterling to US dollar is driven by yield advantage and UK data dynamics. Both are bullish, but the risk profiles are different. Let me break down exactly what's happening, where the smart money is positioned, and how we are going to trade both of these pairs over the next 24 hours. You're watching Alpha Market Meridian, and this is your dual asset technical and fundamental breakdown for August 18th. Here's my immediate read on these two pairs. Starting with Euro to US dollar, the weekly trend is bearish in the big picture, but we've got a bullish reversal developing. The daily trend is strongly bullish. Prices cleared the 200-day EMA, and I see upside potential to 1.1670 and ultimately 1.1780 on a swing basis. The key invalidation level is 1.1490.4 Pound sterling to US dollar. The weekly trend is neutral to bullish, and the daily trend is clearly bullish. Price is trading at 3-month highs, but short-term oscillators are overbought. The invalidation level for the bullish structure is a break below 1.3430. My bias is cautiously bullish, but I'm looking for a pullback before committing size on sterling. Now, before I get into the details, I want to hear from you. Which pair are you trading this week? Euro to US dollar or Pound sterling to US dollar? And are you buying the breakout or waiting for a pullback? Drop your thoughts in the comments. Let's start with the macro picture, because both of these moves are fundamentally driven. The US dollar has been getting hammered over the last 24 hours, and it's all coming down to one thing: expectations. US retail sales fell 0.6% in July, the first decline in 9 months. When you combine that with cooling inflation prints and a softening jobs market, the market has collectively decided that the Federal Reserve is done hiking. The probability of a September rate hike has collapsed to just 33%. Now, let's look at the euro side. The Eurozone is telling a completely different story. Inflation has ticked back up to 2.9%, and the market is pricing in an 84% probability of an ECB rate hike in September. That divergence right there is the engine driving euro to US dollar higher. And it's not just a paper divergence, it's a yield divergence. The Eurozone German bund spread versus the US Treasury is widening again, and that's the ultimate driver of currency flows. For Pound sterling to US dollar, the story has a different flavor. The UK base rate now matches the US at 3.75%. That stripped the greenback of its historical interest rate advantage for the first time in years. This is what I'm calling the UK yield shield, and it's the primary reason sterling is holding its ground even as the dollar weakens. But there's a catch. The UK has its own vulnerabilities. Inflation is sticky, and the economy is fragile. That's why tomorrow's UK CPI data at 6 a.m. GMT is absolutely critical. If CPI comes in hot, It reinforces both hawkish expectations and sterling rips higher. If it comes in soft, we could see a significant pullback. Today's calendar is lighter but still important. At 6 a.m. GMT, we get UK unemployment and average earnings. That's a high-risk event that will set the short-term tone for pound sterling to US dollar. At 12:30 p.m. GMT, US building permits and housing starts drop, followed by industrial production at 1:15 p.m. But the real event is tomorrow evening, the FOMC July meeting minutes at 7 p.m. GMT. Any language that hints at a dovish shift could send both pairs through the roof. Now let's get into the charts, starting with euro to US dollar. I'm going to weave the fundamental story into this technical analysis because they're inseparable right now. Starting on the weekly time frame, we are still in a long-term consolidation pattern that's been bearish overall. But look at the last 3 weekly candles. They're forming a bullish reversal pattern with higher lows and a closing price that's breaking above key moving averages. The weekly RSI sits at 52, which is neutral to bullish. That's actually good news because it means we have plenty of room to run before hitting overbought territory. Moving to the daily chart, this is where it gets really interesting. Price closed above the 200-day EMA at 1.1570, and that's a big deal. I've been watching this level for weeks, and I know a lot of institutional algorithms are programmed to buy that exact trigger. What stands out to me is not just the close above the 200-day, but the way price accelerated through it. That's momentum, not just a wick. The daily RSI sits at 62.5, which is bullish but not overbought. I want you to note that number, because I've seen this exact setup before. In June of 2022, the RSI hit similar levels before a 300 pip rally. The daily ADX is at 22.4, which tells me this trend is still developing. That's actually bullish, because it means we haven't seen the full momentum surge yet. The MACD is in positive territory with a bullish bias, and the Williams percent R at -21.5 confirms we are in strong buying pressure territory without being overextended. Dropping down to the 4-hour chart, we are in a clear bullish continuation structure. Price has been making higher highs and higher lows since the August lows, and the MA5, 10, and 20 are in a beautiful bullish crossover configuration. The RSI on the 4-hour is at 68.2, which is approaching overbought but still has room to run before extreme readings. The 1-hour chart is the only place where I'm seeing any potential weakness. We've had a bit of a stall near the 1.1570 to 1.1580 area, and that's natural profit taking after such a strong move. The key resistance levels for euro to US dollar are 1.1600, 1.1615, and 1.1635. Support sits at 1.1560, 1.1520, and 1.1490. The daily pivot is at 1.1554, and that's a level I'll be watching closely for a potential retest. Now let's turn to pound sterling to US dollar, and I'll tell you right now, the story here is different. Both pairs are bullish, but the technical picture on sterling is much more extended. Starting on the weekly time frame, sterling has been in a neutral to bullish consolidation pattern since early 2026. We've seen a series of higher lows, and the last 3 weekly candles have closed with increasing bullish momentum. The weekly RSI sits at 56, which is solidly in bullish territory without being overbought. That's important because it tells me the bigger picture still has room to run. Dropping down to the daily chart, this is where the story gets complicated. Price is currently trading at 1.3545, and we just touched 3-month highs at 1.3571 before pulling back. The daily close above the 50-day EMA at 1.3420 is a clear bullish signal, and the MA5, 10, and 20 are in a perfectly bullish alignment. The daily ADX is at 26.1, which confirms a firm trend is developing, but here's the problem. The daily RSI at 68.2 is approaching overbought, and the CCI at 134.8 is already in overbought territory. The stochastic at 83.1 is overbought and showing a minor turning signal. This is a classic technical setup where the trend is bullish, but the momentum is stretched. I've seen this exact divergence 3 times in my career, Twice it led to a violent reversal, once it didn't. Here's the tell. When you see overbought oscillators at resistance, you need to wait for confirmation. The confirmation I'm looking for is either a clean break above resistance with momentum, or a pullback to support that resets the oscillators. The 4-hour chart is where I'm seeing the most actionable information. We've had a beautiful bullish structure with higher highs and higher lows, but the 4-hour RSI is at 68 and the stochastic is overbought. What I'm watching is a potential consolidation phase or a pullback to the daily pivot at 1.3500. The 1-hour chart shows a bit of a stalling pattern near the highs, which is typical before a major data release like today's UK jobs data. The key resistance levels for pound sterling to US dollar are 1.3555, 1.3560, and the major multi-month level at 1.3700. Support holds at 1.3490, 1.3450, and 1.3430. The daily pivot is at 1.3500. Let me give you a personal insight here. This level on pound sterling to US dollar reminds me of the August 2022 squeeze, back when the same liquidity grab fooled everyone into thinking the rally was over. I watched traders get shaken out of long positions on a pullback to the 50-day EMA, only to see price explode to new highs within a week. The lesson I learned was that when the fundamental backdrop supports a move, you don't fight it. You just position yourself intelligently and respect the overbought signals. Now let's get to the part that actually matters, the trade setups. For each pair, I've got 2 setups, 1 scalp and 1 swing, each with exact entry levels, stops, and targets. EUR USD setup 1. Scalp long on breakout above 1.1600. The first euro to US dollar setup is a momentum scalp. The trigger is a clean 5-minute candlestick close above the psychological 1.1600 level. If we get that with a follow-through candlestick, I'm entering long. The take profit is 1.1620, which is the next immediate daily resistance block. The stop loss goes at 1.1585, just under the daily structural point. That gives us a risk-to-reward ratio of roughly 1 to 2.3. I want to be in and out of this trade within an hour or two unless momentum accelerates. If price starts accelerating through 1.1620, I'll trail my stop and let it run to 1.1635, but the primary target is that first resistance level. EUR USD setup 2. Swing long on retest of support. The second euro to US dollar setup is the swing trade. And this is the one I'm most excited about. It's a larger position with multi-day potential. I'm setting buy limit orders inside the 1.1550 to 1.1565 retest zone. That's the area where prior structural resistance has flipped to support, and it's exactly the kind of level where institutions will be placing their bids. My take profit target is 1.1780, which gives us over 200 pips of potential upside. My stop loss is placed defensively at 1.1495, resting directly below the S3 structural invalidation floor. That's a risk of about 65 pips for a potential gain of 220 pips. That's a risk-to-reward ratio of over 1 to 3, which is exactly what I look for in swing trades. I'll be scaling into this position gradually, adding on dips below 1.1550 if the broader bullish structure remains intact. Now let's look at pound sterling to US dollar, where the approach is slightly different given the overbought conditions. GBP USD setup 1. Mean reversion scalp short on week data. The first pound sterling to US dollar setup is defensive. If the UK jobs data at 6 AM GMT comes in weak, specifically if average earnings miss expectations at 4.6% or unemployment ticks higher, I'll execute an immediate short on a breakdown below 1.3540. The take profit is the daily pivot at 1.3500, and the stop loss is 1.3560. This gives us a risk-to-reward ratio of 1 to 2. Here's the thing about trading news. I've learned that the first move is often the fake move. So I'll wait for the initial spike to exhaust, then enter on the retest of the breakdown level. If the data beats expectations, this setup is invalid, and I'll actually flip to a long bias. GBP USD setup 2. Swing long at deep discount. The second pound sterling to US dollar setup is a swing trade that I'm really excited about. I'm waiting for a deep pullback into the 1.3430 to 1.3460 liquidity pool. This area coincides with the ascending trend line from the August lows, the 50-day EMA, and the S2 horizontal support layer at 1.3450. My buy limit orders are set right in this zone, and my take profit target is the major resistance block at 1.3660. That's over 200 pips of potential upside. My stop loss is placed offensively below structural invalidation at 1.3380. That's a risk of about 50 to 80 pips for a potential gain of 200 to 230 pips. That's a risk-to-reward ratio of anywhere from 1 to 2.5 up to 1 to 4.6, depending on exactly where you enter. This is the trade that aligns with the broader bullish structure while giving us a margin of safety. Before we move to risk management, I want to pause and ask you something. I've given you 4 setups across 2 pairs. Which pair and which setup fits your trading style best? The Euro to US dollar momentum scalper, the Euro to US dollar swing retest, the pound sterling to US dollar data reactive short, or the pound sterling to US dollar deep pullback swing? Hit the comments and tell me your preference, and I'll share some additional thoughts. I need to be direct with you about risk management because we are trading 2 pairs with different risk profiles. Euro to US dollar is in a clean bullish structure with room to run. Pound sterling to US dollar is in an extended bullish structure with overbought oscillators. The risk management approach for each should be different. For Euro to US dollar, I'm comfortable with standard position sizing because the technicals and fundamentals are aligned. For pound sterling to US dollar, I'm reducing my position size by at least half because we are at multi-month highs with overbought conditions. Here's my personal rule, and it's saved me from a lot of pain over the years. In overbought conditions, you reduce your risk. Period. I've been caught on the wrong side of overbought rallies before, and it's not fun. In 2023, I was too aggressive on a pound sterling to US dollar breakout near these exact levels and got stopped out 3 times before the move actually materialized. That taught me to respect the overbought signals. Additionally, for both pairs, I never risk more than 1% of my account on any single trade. With high-impact news like the UK jobs data and tomorrow's FOMC minutes, I'm reducing that to 0.5%. The market doesn't care how confident you are. It cares about levels and momentum. So trade the plan, trust your stops, and size appropriately. So where does that leave us for the next 24 hours? The US dollar is in a position of weakness, driven by collapsing Fed rate hike expectations and weak economic data. Both Euro to US dollar and pound sterling to US dollar are benefiting, but they're telling slightly different stories. For Euro to US dollar, the key level is 1.1600. A clean break and hold above that level opens the door to 1.1635 and 1.1670. Support at 1.1560 and 1.1554 must hold to keep the bullish structure intact. My swing retest entry at 1.1550 to 1.1565 is the higher probability play for larger size. For pound sterling to US dollar, the key level is 1.3575. A clean break above that opens the door to 1.3610, 1.3660, and eventually 1.3700. But with overbought oscillators, I'm expecting a pullback to 1.3430 to 1.3460 before the next leg higher. My swing entry is exactly in that zone. Remember, we've got UK jobs data at 6 a.m. GMT, US building permits and housing starts at 12:30 p.m., and then tomorrow is the big day with UK CPI in the morning and FOMC minutes in the evening. I'll be covering both of those events as they happen, so make sure you're subscribed and have notifications turned on. Also, don't miss Friday's PMI data coverage, because that's going to be another volatility driver for both pairs. If you found this dual asset analysis valuable, please give it a thumbs up and leave a comment with your thoughts. I read every comment and I'll be responding to the first 50. This is your Trade Meridian Decoded, and I'll see you in the next breakdown.